I'm real excited to bring to you today's video. Today's video is an interview that I did with Mr. Amed Hazel. Amed Hazel is a successful note investor. And in today's video, I'm going to interview him and pick his brain about some things that I think you guys should know. But before we get started, I'm going to touch on three things. First thing is some lingo that you probably need to catch up on before we get started. One, what is a mortgage note? A mortgage note is basically a mortgage loan, just a regular loan used to buy a house. So there's three ways that are kind of prominent to invest in mortgage notes. One, you just collect the payment, you just collect the mortgage payment. So instead of paying Bank of America, they would pay Bank of You. And then the second one is kind of like a fix and flip. You take a note where the buyer's not paying, that's called non-performing. So you take a non-performing note, rehab it in a way and get the buyer re-performing, and then you sell it to an investor. And then that's kind of like a fix and flip. So then you have the one that's kind of like bird real estate, where you buy it non-performing, rehab it, get it performing, and then you just collect those rents, but in this case they're mortgage payments. So it's like rental real estate, but it's a little bit more powerful because you don't have ownership of the property, so you're not responsible for the repairs. You just have control of the property, so you're just responsible for collecting payments. So it's like a strategy with a little bit of an upgrade, in my opinion, because you don't have to deal with those dreaded 2 a.m. telephone phone calls that don't really exist. Number two is, if you have any questions on any of the terms or anything, please leave them below. I will do my best to answer any questions that you might have that come up for terms. Say, hey, I don't really understand this. Can you explain this a little bit more? And if I don't know, I'll ask Mr. Hazel. And then number three is, please share this with someone. This is a call to action. I really need you guys. This is an investment strategy that a lot of people don't know about. I feel like it could be very powerful. If you get any value out of this video, please like, leave a comment, and share. Share this with somebody. This could be something where, family generational wealth could be set up in a way that's not really hands-on. Yeah, not everyone can handle rental real estate, but who can't just have anybody just in the mortgage payments? You know what I mean? Because you're not responsible for repairs or things like that. So if you could put mortgage notes in your portfolio, that's something that, like, if you were to pass that down, that's very passive, and that could be real generational wealth, just generational monthly payments coming down to, your future generations, future streams of income. This is a real powerful strategy that, if you get any value of this video, please like, comment, and share, so we can get Mr. Amed's information out there to people so they can know that this type of investing even exists.
All right, so you go ahead.
So my wife and I, we were shooting some video in the home theater. Somebody had commented on, I think, the video that you shot, and I got a notification. I was like, what? So I put my name in YouTube, and your video came up, and I was like, thanks. I got to reach out to the brother.
Yeah, and I appreciate you reaching out, because I was reading your book, and I was just like, man, this is so, like, something so different that it isn't touched on in the general real estate community. People don't even know about this. So I'm happy you can come on and really explain it to the people a lot better. So, I mean, let's get started. How'd you get started in investing in notes?
Awesome. So I was a real estate wholesaler. I took a 3-day class, and right out the class, my wife and I, we had some background in marketing because we owned a martial arts school, and we had been marketing for our martial arts school. And right out of the class, we hit the ground running.
Right.
So within the first 40 days, we closed on our first deal. So we were ecstatic.
Right.
But what happened was, we wind up getting so many deals over the course of, let's say, a year and a half, so we closed on about 100, somewhere between 135 and 185 deals in a year and a half. So to do that, we were looking at probably 1,000 deals. So our closing ratio was about a little greater than 10%. It was a struggle, though. Constant appointments, constant phone calls, constantly sending out letters. The printer and the monitor was in the bed with us. We had a big 15-inch monitor that weighed like 150 pounds in the middle of the bed with the printer at the foot of the bed, because we could only buy like a short cable for it. We didn't, it wasn't no long cable for it. So that printer, she kept feeding papers in the printer all night long. In the morning time, we would wake up, fold them up, stick them in the envelope, and send them out. Now somebody will say, why you just didn't hire a company? Well, the reason that we did that is because we were constantly making tweaks to the sales copy. Eventually, we got so overwhelmed, we couldn't keep up no more. And my wife was like, I quit, because we was running a real estate business on the day and the full-time martial arts school at night. So she finally said, I quit. I was like, quit? Like, what does that mean? Like, what are we going to do? Like, you can't leave me holding the bag. Right. So I went to one of my mentors and I was explaining to him, I was like, man, I think we're going to quit. He's like, quit and do what? He's like, the Hazels are closing so many deals. You guys should be the bank. And when he said, it was almost like God spoke to me when he said that. I was like, what? Like somebody spiritual tapped me on my shoulder and said, yeah, be the bank. And I started talking to my wife about it. We started investigating how banks money. We learned that they do it through mortgages, and here we are.
I wanted people in the channel to understand that real estate investing, especially wholesaling, is a lot of work. It's not real quick money as they make it seem. It's a grind. You got to constantly put that work in it, and you can get burnt out, especially if you get big time like how you guys work. So it sounds to me like you guys are putting a lot of effort and energy into the wholesaling. It started off as a side hustle, and it just grew to a point it was like you guys are working 2 full-time things. And note investing sounded like becoming the bank led you into note investing. So what about note investing seemed like it could be more time efficient than wholesaling?
Awesome question. So what happened was, to answer that directly, now there was a process. There was a long process of actually, changing my mindset. Most people think that it's about the skill set, and that plays a part in it. But the ultimate skill is the mindset, how to think like a banker would think, because that has never been taught to us. When you are in real estate, they're teaching you the property. And a banker is saying, no. I don't want nothing to do with the property. He wants control without ownership. Whereas, on the real estate side, you're being taught, no, own everything.
Right.
So we learned quickly that, no, it's about owning nothing.
Right. This is something that gets preached about, especially in our community. Be your own boss, own your own. So could you get a little into the difference between owning something and having control over something?
Yeah. When I have control without ownership, I don't have the responsibility that comes with ownership. When I have control, I just get all of the benefit with no responsibility. So for an instance, if I own a mortgage note and the homeowner is paying that to me, well, what happens is if the hot water heater goes up, that's not on me, that's on the homeowner. If, the toilet clogs, that's not on me, that's on the homeowner. I don't have to deal with taking a call, let's say in the middle of the night, where the homeowner is saying, the toilet overflowed or what have you. You got to understand that what my main concern is, because I do care about the homeowner, I do care about their troubles, but my main concern is that mortgage is paid every single month. That's my concern.
Okay. So I want to break it down for the listeners. Basically, you went from an Uber driver is a typical real estate investor where they own the house, the car, they're responsible for the maintenance on the car, but they're allowed to, through the mortgage, they're allowed to, buy more than they could afford. And through the Uber, you're allowed to make a little bit of money than you could by not getting a taxi license and that kind of thing. So Uber controls all of the interactions, but they don't own any of the vehicles. Yet they're able to make so much money because they don't have to worry about maintenance and that kind of stuff. So it's similar to that. And for the people listening, it's kind of like you became Uber and stop being an Uber driver.
And from that, so what I began to learn, now there's so many ways to like really maximize what it is that we do. Most people would think you could really do that. And it's like, well, when you're the banker, you begin to get to make decisions and control the situation in a lot of different ways. Like for instance, if we buy a mortgage and let's say Mrs. Jones is 9 months behind in her payment.
Right.
Well, I can come in and say, gone. Whereas a bank, they can't really do that, because if a bank does that, then the bank has to set a precedent as to why they did that. And now they have to put that across maybe 35 or 40,000 loans.
Mm.
Whereas me and my company, because I'm a private company, I can pick and choose who I want to give a discount to and who I don't want to give a discount to.
So you add a lot of value to the people who have the mortgages because you have more flexibility than the Bank of America per se would have.
Yeah, absolutely. We can make quick decisions. I don't have to take it to a board, go through a long legal process with them. I can simply, my wife is my business partner. So I look at her and I say, Mrs. Jones fell behind because of the coronavirus or what have you. What do we want to do? And she'll say, Ms. Jones has been great. Let's waive her last 3 payments and maybe even give her another 3 months free.
Wow, that's powerful. That's the power of control. So I want to know, could you take us through the process of how you went from starting out learning about the notes into actually like getting a note that you could service or do something with?
Yeah. So my story essentially was I was working on a deal with a celebrity. Their property was in foreclosure and they didn't want anybody to know. They didn't want their endorsements to be affected. So we were going to do a short sale. I worked the deal out and it was looking good, but this person's attorney started getting greedy. So I was talking to the bank, the president of the bank, because it was a large estate. And I was talking to him and he was like, well, I appreciate what you're doing. How can I help you? And I said, well, I'd like to buy some mortgage notes. And, so we're talking like late 2005. And he said, well, I don't do that, but I have some friends that do. Through this process, though, I didn't know what I was talking about. I didn't know what I was in for. I didn't really know anything, but that I wanted to do it.
Right.
So I was like, trying to boss up, but I didn't really know what I didn't know.
Right.
So essentially, he got one of his friends to call me. I linked with another business partner that I thought was legitimate. And that business partner closed on the deal around me. I was only asking for 3 points on the deal, but it was significant. It was about $154,000. I've been where most people have been, which is I had no money. If the guy had given me $1,000, I would have been happy, but he gave me nothing, right? So from that, though, the silver lining was the bank that I closed the deal with, or that the other guy closed the deal with through me, that bank started circulating my name all throughout the industry saying Amed Hazel can close multi-million-dollar portfolios. And that's really how I got my name in the business, which was kind of through a tragedy. So once that started happening, though, banks started reaching out to me and I started asking the questions like, so, okay, how do I do this? How do I get from this point to this point? The same way that we do in any business model is we start building relationships. I started building relationships with with the sellers, but the buyers, there were no buyers because most people even today still don't understand how this process works. And they don't really understand the model or mindset of being a banker. So I have to go through a process of where I have to educate a person to get them up to understanding why they should be buying the note instead of the property. Once I had done that, I was able to close a deal and complete a transaction. My first, I think I made $38,000 on it, and I did it in, less than 2 days.
Crazy. Crazy.
Yeah.
That ROI is crazy. That's probably like 10 million% or something crazy if you do the math.
I would say the ROI is so huge, like you said, 10 million.
Yeah.
I'm going to say it was greater than that. Here's why. When you embark on this space, you are embarking on something that 99.9% of the country does not understand. Bring me your best guy from Wall Street, and I guarantee you within 10 minutes, you'll see that this guy doesn't really understand, right? I do this every day, all day. And most of the people don't really understand it because it's like baking a cake. If you just eat the flour by itself, it doesn't taste too good.
Right.
But it's when you mix everything together that now you have something that's totally delicious and sweet. It's more than 10 million% because when I did the transaction, I had no stake in the deal.
Wow.
All right.
Returns.
Yeah. So I had no stake. I didn't have a stake with the seller. I didn't have a stake with the buyer. I just facilitated the transaction. And once I did that, immediately I made 38 grand in the matter of maybe, let's say, 2 days.
That's crazy. It sounds like these notes, I know that the people listening are probably getting excited now to hearing that kind of stuff. So could you talk us through the process of taking a note from a non-performance mortgage note to a performing mortgage note? Like when you get the list from the bank, what goes through your mind?
As soon as I get a list from the bank, the first thing that I start thinking about is where are these notes located? What states? So certain states I don't like to deal with, and I have a system for how I actually view the notes that I'm dealing with. So for an instance, if I get a portfolio and 90% of the notes are in New York and New Jersey, I may pass on that portfolio. I may. But the reason that I say that is New York and New Jersey are pro-homeowner states, and they have long foreclosure times. So if I have to take a property back, then, I may have to wait 4 years before I can actually get that property back. So I tend to stay away from those states unless I have a buyer looking to buy inventory in those states. Then I'll look at the portfolio and look to flip it to a New York or New Jersey buyer. But to answer your question, when I get a note or a portfolio, I may choose a note. Let's say the note is in Maryland.
Mm-hmm.
So I choose the note and I look at, okay, where is it though? Is it down on the Eastern Shore or is it in Baltimore City, Baltimore County? Okay, let's say it's in Baltimore City. Well, fantastic, because I know so many buyers that buy in Baltimore City, and I know Baltimore City like the back of my hand.
Right.
So if it's in a prominent community in Baltimore City, Liberty Road area,
Okay.
maybe just cross Northern Parkway.
Right.
So now I know, okay, this is a pretty good area. I can get this note, I can buy this note from the bank, and as soon as I buy it, I'm thinking, okay, what do I need to do with the homeowner? So I'm looking, I'm saying the homeowner has fallen behind 3 years in payments, and the bank has not foreclosed. So I need to come up with some creative solutions to find out if, number one, the property is occupied or non-occupied. That's real simple for me to do. I can simply make a call to a service and have somebody go out and check the property. So if the property is non-occupied, I just get in contact with the owner and I say, listen, I see we got a non-occupied property. What is your intention? Is your intention to keep it and stay in it and start making payments? Or is your intention to just let it go? So from that point, I find out the homeowner is saying, well, we moved out and I'm living with my sister because I thought the bank was going to foreclose. I say, well, if you want to move back in, you can. We won't foreclose. And if you start making payments regularly, then we can just forgive the 3 years of back debt that you owe bank of so-and-so. We'll forgive that and let you start fresh.
Wow. So it sounds like you guys can do a lot of good for people.
Yeah.
Willing to work with you and get in contact with them. So do you want to take a property back that's vacant or a property that's occupied?
I would to work with the homeowners. If it's vacant and the intention is for the homeowner to not go back, then I ask the homeowner, I just simply say to the homeowner, listen, we can drag you through a long foreclosure process. We have creative ways of garnishing your wages. Like, why do we want to do that? Look, let me just send you a document. You can deed the property back to us, and then we'll just let you out of it with no problem. We'll let you out of the deal with no problem.
And that saves their credit. That would save their credit because you just let them out of it. Okay?
Yeah. Yep. And then from that point, now we can just list the property, on the open market for a deep discount and get rid of it.
So is this a situation where, like, I tell people, like, to look at zip codes in Baltimore City, focus on like 2 or 3, learn those zip codes? Are you focusing on like 2 or 3 states and knowing like the ins and outs, like Chicago or, Philadelphia? Or are you picking like a whole bunch of states and you're just staying away from New York and New Jersey?
Yeah. So, we invest nationwide, but my criteria is I try to stay away from areas that are too rural. Mm. So because that makes it difficult for me to, liquidate the property if I need to. But we'll operate nationwide. Any metropolitan area is going to have some guys that are putting up "We Buy Houses" signs. Right. I can always reach out to somebody or a RIA or something to say, I got this deal I'm looking to liquidate. So we invest nationwide.
Okay, so a note comes across my desk and it's in Dallas. I've never been to Dallas before. Would it be a situation where I could calculate the numbers, run the numbers, say, all right, this house, good loan to V, I should purchase it. And I could just call like the Dallas Real Estate Association and say, hey, I got this house in, on 123 Main Street. I want to sell it for this price. Could you market it for me? Would it be something like that?
Absolutely. It's that simple.
Wow. Yeah, that's a phone call.
It's just that simple.
That's crazy. That's a phone call away. Wow. Yeah. So is there any licensees that someone would need to purchase before or get involved with, going from state to state commerce or anything like that? Something people wouldn't really know.
My general answer is that there's no license that needs to be had. But my specific answer is certain states require you to have a license to be a licensed debt collector. I think Chicago charges $750 for that license. And I think Maryland charges $1,500.
Okay, so it's doable.
Yeah.
Yeah. Okay. So what is the due diligence process for a note?
So the due diligence comes into 3 general categories. We call it the 3 Ps in the note business. I look at the paper, I look at the property, and I look at the person. With the paper, I'm actually evaluating what we call the collateral file. I'm looking at that file to make sure all of the documents that I need to see are there. With the property, I'm looking to see what the comps are in the area, the property condition, what the school system is like. Is this an residential/industrial area? Are there train tracks running through the community? I'm looking at factors like that to determine whether I want to invest in this deal or not. And then with the person, I kind of pull, the research and data on them to see, make sure I got a correct name and address. I look to see if the address that they are at, are the utilities on or not. That kind of confirms for me whether or not the property is vacant or occupied. So I look at that. I also see if the name is somebody that I recognize. Like, for an instance, and I'm not saying that this is the case with this person, but I'm just using this name to illustrate a point that if I see a deal somewhere, let's say it was California, and the deal says the homeowner name is Kim Kardashian.
Right.
And I look and I see that the husband is Kanye West, right?
Right.
I'm like, that's them, right?
Yeah.
So now I have to deal with this individual case differently than I would, a John Smith.
Because you can't really send that out to your buyers list. You got to be a little bit more sensitive.
Right.
Okay. So you got to look at the 3 piece when you're looking at a deal. So I wanted to know what's going on right now. How is that affecting the note business? Is it because I know the banks, they're tightening up lending right now. So is that a situation because certain businesses aren't getting income from, like, I guess, commercial? If you do commercial, is it like notes are on a kind of a discount right now, or what's going on?
What happens is most people, they used to say that we had a 15-second attention span.
Mm-hmm.
They say a goldfish has a 10-second attention span. Now they're saying that we have an 8-second attention span. And the reason that I bring that up is a lot of people don't look at historical trends.
Okay.
And a person can't think back to what was happening in, 2006, 2007. What was happening then, you see the same trends happening now with the banks being so tight on lending, right? That is a sign for an impending crash. If a person could see a car crash before it happened, don't you think the person would be tightening up, making sure their seatbelt is nice and tight, right? That's what people do when there's an impending crash. They start tightening their straps to make sure that they're safe.
Oh, okay.
So
be trouble ahead. So they're tightening lending so they have more secure loans on their books.
From 2008, banks are still holding trillions of dollars of defaults from 2008.
Wow, 12 years.
So from 2008 until now, they're holding a nest egg of defaults from that debacle, but you still have an attrition rate on loans defaulting anyway.
Right.
You're going to have that naturally, right?
Yeah, just part of
So they're getting to a point where they're looking to now start to say, we need to really start liquidating some of these deals. And we're just hoping that they do it before it's too late and they have to flood the market with all these deals. Because as soon as they start flooding the market with all of these deals, now we start looking at the whole economy being destabilized and possibly sending us back into like the Great Depression.
Wow, it could get that level?
Absolutely.
There's so much bad debt they have on their books. I'm of course junior to you on this stuff, but don't banks have to legally get a certain amount of bad debt off of their books?
They're normally required to keep 10% of bad debt on their books. But what most people don't really get is that we are a globe,
okay,
of the bankers, for the bankers, by the bankers. What I'm about to say is my opinion. I'm wondering why so many people get into political arguments and they're so upset with whoever the leadership might be. And I'm like, you don't understand that the bankers run this globe.
Mm.
The bankers are running everything.
Married the wrong person.
Right.
Yeah.
And when you understand that the bankers are running it, then you say, or I said, let me start looking at this from a completely financial perspective. Well, there's no need to look at it really even from a racial perspective, from a religious perspective. That's not even the case. We got to look at where the money is coming and going to.
Right.
But if you begin to study the history of money, then everything will be revealed to you that this is a pattern that happens from society to society over, a millennium.
Okay.
Most people think that we even have money. We don't even use money. We use fiat currency.
Right, because money is silver and gold. It's stated by the Constitution, actually.
Right. So we walking around and we think that we have money, but it's the paper money that you may have is no different than the monopoly money that's in the monopoly game.
You know, it's crazy. It's actually the same color now since the 50s of pink.
Yep.
That's crazy. So I personally want to move overseas, live overseas, retire early, move overseas. Is retiring early something that could be done living abroad and trying to invest in notes? Is that something that could be done, or is it something that you really should be in the United States to do?
You can invest in notes anywhere. If you have some type of connection to the internet, you can do it. I do most deals right through my cell phone.
Okay.
The only time I even really pull up my iPad or my laptop is so that I could see the full spread on like an Excel sheet. So the Excel sheet might have 40 columns, and I don't want to be looking at that on my phone.
Right.
But that's the only time I need a laptop.
So this is something I could do even while living abroad. So
let me show you something really quickly. This is what they call a bank coin. And a bank coin allows me to send wires wherever I am.
That's crazy. That's next level right there. I didn't even know something that
Yeah. So you could be in China, and I can just simply use my bank coin to transfer, money from my account over into your account.
That's crazy. So the internet, the signals and all that data and all that stuff, you can do this anywhere.
Anywhere.
You just focus and stay on it. Of course, the time zones might make it a little bit difficult, but if somebody wanted to, they could be in Australia somewhere and still invest in their notes. They could be in the middle of Sudan. If they have enough internet connection, they can get to work. Okay. Yep. I know that you have a fund. So would you recommend somebody going out there and just trying to pick up a note or two to start off? Or should they try and just, say, you know what, I'm going to try and start a fund from the beginning? Yeah, well, okay. So when you start a fund, what the attorney that is helping you create your documents is going to do, they're going to want to know what your track record is in this asset class. Mm. When I was first starting out, I went through sort of a full investigation on what asset classes I had been used to investing in. So if, like, for instance, my attorney said, well, you can buy notes on anything. You can invest in notes on anything, but we don't want to see you buying certain properties because you don't have experience buying those properties. So they don't want to see me go out and buy an oil rig with investor capital when I don't have any experience in oil rigs and fracking and stuff like that. Okay, that makes sense. So they want to make sure that your offering is congruent and that you can deliver on what it is that you say you're going to deliver on. At the same time, a fund is a business in and of itself. Okay. So if you are, let's say, a wholesaler, that's a business, but then you're going to start a fund, that's an entirely different business. Running the fund is different than actually doing the skill set, which is wholesaling. Got you. So I have fund expenses and operational costs that I have to look at and manage. And then I have note expenses and operational costs that I have to also look at. So I have essentially a team of accountants that are watching both my fund and my note business. Got you. So it's just two different things. Yeah. Got you. Okay. I mean, it's not even, a lot of people think that, I want to be a fund manager. Like, yeah, I own a fund. It ain't even cute. Like, once you start doing it, you're like, oh, this is serious. There's a lot of regulations and compliances that you got to comply to, I'm sure. Especially if you can't even invest the money how you see fit if you don't have the the history behind it. Somebody can
Exactly.
off your oil rig for $1, knowing you could probably flip that, but you can't because that's not what your expertise is. Investor protections, which is good because you're a good dude, but there's a plenty Bernie Madoffs out here that would get busy if they could.
Yeah.
What is the best advice you would give to somebody who wanted to get started in note investing?
My advice would be, like most people, what they want to do is people want to say, I want to invest in notes, and they go and they want to purchase a note.
Right.
What I say, and what I tell everybody that comes in contact with me is, don't even spend your first chunk on notes. Your first chunk needs to be spent on your education.
Okay.
So you need a good mentor or coach that can help you learn and understand the process, get it down really good, and even maybe somebody that can guide you, hold your hand while you do your first deal.
That's crazy. So this is the book, Mr. Hazel. I'm going to put a link below so you guys can purchase this book. This is a great book, you guys who want to get some information, get started. Check out this book, Profiting from Non-Performing Mortgage Notes by Amed Hazel. It's a great book. I definitely think you should check it out. If this interests you, it's simple, easy to read, and it has a lot of good information. It's not a lot of high-level words that you won't understand. He makes it so someone starting out could take the information, process the information. So this is a book I recommend for people who want to get started, and a great way to get started. I only talk about the books like I really believe in.
What's great about it is that, that there's so many people that, like, I wish I could emphasize this, that there are so many people that just don't know about the space.
Right.
And if they have heard of it, they don't know how the business actually works. I was at a conference, and it was a private lending conference. And when I was at the conference, I talked to a guy, and he was let me say it like this. He was a note expert. So when I hear that, I was like, oh man, I need to go talk to the note experts, right? I want to, have fun with my colleagues.
Yeah.
So when I went to talk to the guy, I said, I hear that you're the note expert and everything. And I tell him who I am, and, he recognizes my name and everything. And he's like, so are you buying defaults? And I'm like, absolutely. Like, I'm getting real excited. I'm like, absolutely. So he says, well, great. I have a lot of defaults that I'm looking to liquidate. I say, okay, I'm interested. So he says, what are you paying right now? So people want to know, okay, how much are you paying for defaults? And my answer to that is, it depends, right? It depends on what it is, right? And so I'll answer like this. I'll pay, from 10 cents on the dollar, to 90 cents on the dollar for the right deal. So he's like, well, great. He said, well, what we're looking for is we're looking for par. We're looking for 100% on the deal. I said, okay. I said, so let me get this straight. You're looking for, 100% of your money on a default. He's like, yes. I said, okay, tell me a little bit about this default. So he said, these are loans that we originated. I said, wait. Okay, hold on a second. So you originate a loan, let me guess, on a fix and flip residential? He's like, yes. I'm like, okay. So you make a bad loan on a residential that's under development and construction, and you want me to pay you 100% of your money back because you made a bad decision.
That's crazy.
Nah.
You get out of here with that. Oh, and I want people who are listening to pick on some of the game that Mr. Hazel is giving us right here. Number one is that you got to know what you would like to invest in. You got to know like what your numbers are and stick to your numbers. You know what I mean? You can't really get hyped up behind people because they're quote unquote expert. Because number two, people is full of you know what. You know what I mean? They can be making money. They might not be good at making money, but people might try and get over on you, especially if you get too hyped up to be around somebody that's a quote unquote expert. So just be careful. And that's something I want people to pick up on is that you can go to these meetings. These people can actually be successful people, but it doesn't mean they won't try and get over on you thinking that you're like some bubble gum from, West Bummer. You know what I mean? You know what I mean? So you can go ahead.
Yeah, I'm glad you brought that up. And I'm glad you, you broke that down like that. Cause sometimes I try not to get too crazy. Yeah. Like if I'm talking publicly, right, I try not to get too crazy, but I'm like, wait a minute. So I said to the guy, I said, so you're not even dealing in like banknotes.
Right.
He said, banknotes. And I'm like, yeah, banknotes. He said, this is what he said to me. He said, the banks sell notes? I'm like, okay. I'm not talking to the right guy here, right? But that was, again, like you said, that was a wake-up call for me, to see that everybody that's claiming that they're in the note business is not in the note business. In his mind, he's in the note business because he's trying to sell his own bad decisions.
Right.
And he's trying to get the full value, and on one deal that he and I talked about, he was talking about they trying to get the points back. They're trying to get their legal costs back. And I'm like, yeah, this is not, let me tell you, this is not going to happen for you.
That's great that you brought that up, a real life example, how it is out here. And if people don't, I just want to say this to the people, more than you might think, you might be a little bit farther along than you think, you know what I mean? So don't think just because somebody is in a certain place or, might have a little bit more following or clout or something, that doesn't mean they're ahead of you or no more than you, so that's why you got to stick to your numbers, stick to your principles, because business is also a lot about your character. So, you can't be somebody that's swayed too easy or too impressed by glitz and glamour. Somebody's really crushing it and doing stuff like that, that's different. But just because somebody looks like there's something doesn't mean they actually are something, and you might actually be ahead of them. So be humble, but be confident in your own abilities.
Yeah, Nick, and the one thing that I say is that, like, if I was working with somebody on a deal, then my mind is I don't have any problem. Like, let's sketch this out on a whiteboard, right? Let me tell you, number one, how I see the deal. Let me tell you how I think you should see the deal. You don't have to see it that way, but let me tell you how I think you should be viewing this deal. And then after that, you can decide for yourself whether or not this is something that you want to invest in or spend your time with. Because I'll let you know, listen, on this deal, I might be making $9,000 on this deal, but the reason that I could be making 30, but the reason that I'm only making 9 is that I don't want to put the time in. But if you're willing to put the time into the deal, then you can make probably another 50. But I'm letting you know, I'm going to make 9 off this transaction.
Right. And as you do business with people who have upstanding qualities about them, and it's not always about the money. Sometimes some people value the time right now more than the money. Somebody might have just had a kid. They don't got time to deal with a whole bunch of stuff, so you might get a discount. So it's not always about the money. And that's one thing also why I recommend his book, because how Mr. Hazel was just talking about, lots of the other books I've read on note investing is about generating like hard money loans and stuff like that on residential real estate. It's not really about mortgage note investing how I see it, and that's like buying notes from the bank. So that's another plus for his book. It's actually talking about like higher level stuff, not like hard money loans or you loaning money to somebody or seller finance and that kind of stuff. It's like more high level stuff, and that's why his book is really good, because it explains that stuff in a way you can digest.
Yeah, Nick, thanks, man.
I just got that money.